Welcome to the world of FinTech. Join me as I dive into the world of FinTech and challenge myself to uncover how these startups are shaking up the financial industry. Today, we're going to explore the transformative impact of FinTech startups on traditional banking and financial services. From digital payments to blockchain technology, FinTech startups are revolutionizing the way we manage our finances. Let's start with the basics. In recent years, the FinTech industry has experienced a rapid rise, disrupting traditional banking practices and posing a significant threat to community banks and credit unions. FinTech startups are innovative companies that leverage technology to offer financial services in a more efficient, user-friendly, and cost-effective manner. They focus on specific niches like peer-to-peer lending, mobile payments, robo-advisory services, and blockchain-based solutions. Let's take a closer look at Nimble, one of the early FinTech examples disrupting the traditional loan sector. Nimble began in 2005 as a loan provider that serviced everyone, making the loan process faster, easier, and more accessible than ever. Nimble offers small loans up to $25,000 with an online application process, quick decisions, and access to loan money within an hour. It has serviced nearly 1.7 million customers. This is just one example of how FinTech startups are changing the game. But what exactly are they doing differently? FinTech startups prioritize agility, customer experience, and accessibility. They operate with lower overheads and embrace data-driven decision-making, which allows them to quickly adapt to changing customer demands. One key area where FinTech startups have gained an edge is in digital transformation. They have embraced digital channels, enabling seamless online banking experiences that appeal to tech-savvy customers who value convenience and accessibility. For instance, digital banks like Starling have been voted Best British Bank at the British Bank Awards, beating off competition from traditional contenders. This is a testament to their ability to provide enhanced customer experiences. Personalized services are another area where FinTech excels. Leveraging advanced data analytics and artificial intelligence, FinTech companies can analyze customer behavior and preferences to deliver tailored financial solutions. This level of personalization is often lacking in traditional institutions, making FinTech startups more appealing to customers who want tailored financial solutions. FinTech companies also operate with leaner structures compared to brick-and-mortar banks or credit unions. By avoiding physical branches and legacy systems, they can offer competitive interest rates, lower fees, and reduced overhead costs. For example, FinTech companies like Nimble and SocietyOne have significantly reduced operational costs, making financial services more accessible to a broader audience. Speedy processes are another advantage FinTech startups offer. Traditional banks often suffer from slow and cumbersome processes. FinTech startups, on the other hand, leverage automation and digital workflows to provide faster loan approvals, instant money transfers, and real-time financial insights. This not only enhances customer experience but also increases efficiency in financial transactions. In conclusion, FinTech startups are revolutionizing the financial landscape by offering convenient, cost-effective, and customer-centric solutions. From digital payments to personalized services, these startups are shaking up the industry in profound ways. Now let's dive deeper into one of the most significant disruptions in the financial industry, the rise of neobanks. Neobanks are digital disruptors that are redefining how banking services are delivered to consumers. They offer seamless digital experiences and creative solutions that challenge traditional banking models. For instance, neobanks like Starling have been voted Best British Bank at the British Bank Awards. They have successfully integrated fintech innovations such as artificial intelligence, machine learning, and blockchain technology to offer personalized services and enhance operational efficiency. Neobanks leverage digital banking solutions and fintech APIs to deliver seamless mobile payments, peer-to-peer lending, and robo-advisory services. This meets evolving customer needs and provides a more agile and customer-centric financial ecosystem. Neobanks are also expanding their offerings through open banking initiatives and collaborations with fintech startups. This is helping them reach a broader customer base and promote financial inclusion. By integrating RegTech and InsurTech solutions, neobanks ensure regulatory compliance and risk management in their operations. This creates new opportunities for financial inclusion and expands their market reach. The rise of neobanks signifies a transformative shift towards a more agile, customer-centric financial ecosystem. As more customers embrace the convenience and efficiency of neobanks, the industry is witnessing a significant shift towards digital banking experiences. Now let's explore the impact of fintech startups and neobanks on traditional banking. Traditional banks are facing intense competition from fintech startups and neobanks. These agile newcomers can quickly adapt to changing customer demands, offering more convenient and personalized financial services. For instance, community banks and credit unions are now facing challenges from fintech startups that offer cheaper and faster ways to move money abroad. These startups also provide PaaS, or Payment Infrastructure as a Service, which offers a more flexible and scalable way to accept payments and run operations from end to end. Traditional banks are trying to adapt by embracing fintech innovations. However, this is not an easy task, as it requires significant changes in their business models and operational structures. Regulatory challenges are another hurdle traditional banks face. Fintech startups often operate in a regulatory gray area, which can make it difficult for traditional banks to keep up. However, regulatory frameworks are evolving to accommodate fintech startups. This is creating a level playing field for both traditional banks and fintech companies. In conclusion, the rise of fintech startups and neobanks is forcing traditional banks to adapt or risk obsolescence. The future of banking is evolving rapidly, and it's clear that fintech innovations will continue to shape the industry. In conclusion, fintech startups are disrupting the financial industry in profound ways. From digital payments to personalized services, these startups are changing how we manage our finances. The future of fintech looks bright. With advancements in artificial intelligence, machine learning, and blockchain technology, we can expect even more innovative solutions in the coming years. Fintech companies are not just disrupting traditional banking, they are also creating new opportunities for financial inclusion and accessibility. As regulatory frameworks continue to evolve, we can expect more fintech innovations to hit the market. Join me in embracing this new era of financial technology. Together, we can unlock a future where financial services are more accessible, efficient, and personalized than ever before. Thanks for watching. If you have any questions or want to learn more about fintech, leave a comment below. Don't forget to like and subscribe for more content on the latest fintech trends.